Hello everyone, welcome to the market snapshots for today. So, looking at the charts or maybe looking at these numbers, it seems the markets have barely done anything on Monday's session, but a lot has gone underneath. Uh, Nifty 50 closed at 24238, which was 0.39% lower than the prior session. Nasdaq 100 was up by 0.1% at 2338. Sorry, Nifty 500. Nasdaq 100 was up by 0.04% at 28604, and S&P 500 closed at 7443, which is 0.19% lower than the prior session. Looking at the advances, this is Nifty 500, 305 advances to 195 declines. I think very good. So what happened, I think on Thursday, I think the markets reacted very badly, especially the Indian markets. I think a lot of participation and breadth got collapsed in that one session. On the contrary, US did very well on Thursday's session. And that is the reason on Thursday, in fact, I told in my video, like Friday's close is going to be very crucial. And what happened on Friday was, I think there was an absolute bloodbath in the US markets, whereas Indian markets did not outshine, but they just were able to recover every loss they made on Thursday session. So that recovery like basically covered everything which went wrong on Thursday. And the good news about the Indian markets has been that Monday's session has been very strong. Although, like I said, these numbers don't justify that. I mean, if you look at the chart, or maybe if you look at minus 0.39% of gain, 0.10% of gain, basically, I mean, by just looking at the chart, there's hardly anything. But a lot of data points have changed, and one of them is the advances 305 to 195 declines. So I think while the overall market seems very chaotic, um, Indian markets, I think, are struggling just because of this global phenomena, or else, I mean, they have recovered significantly. It is just that they are not able to gain momentum because of all the external noise which keeps happening globally, because of maybe US Iran war, crude going up, dollar going up, all those things. But if you look at in isolation, I think Indian markets are doing well. Uh, but then well doesn't means that you go all in, because for sure that is not what the environment is saying at this point of time. We'll keep discussing those in our further slides. Back to this, new highs were 15 to new lows of 485. Little bit of advantage there too. And talking about the breadth, above 20 EMA 270 stocks, above 50 EMA 310 stocks, above 200 EMA 292 stocks. Has it improved significantly? Definitely not. Is it looking very good? No, definitely not. But I think what is looking good is it is not deteriorating. It is somehow sustaining to these levels. I would have wanted each of those numbers to be above 300. This is what I'm specifying. But somehow, that is not happening because of a lot of external noise, and which is literally not controllable. I mean, by Indian markets in isolation. So I think the biggest takeaway from for me would be for Indian markets is maybe while everything is falling, the Indian markets are at least resisting, and they are not in for a fall. I mean, if they are not able to rise, at least they are sustaining to where they were, and I think that is a good news for Indian markets. This is Nifty 50, like I said. I mean, the markets had become bad during this phase, and I was like really losing a lot of hope, like what is happening. But then just look at it. Although, see, hardly, I mean, people have hardly made any gains from this session in June till today. But the thing is, if you compare it with the rest of the indices globally, you will feel for sure Indian markets are not giving it up. So I think that's a good positive. Uh, Nifty 500 again, like it is looking a much better looking chart. The 50 MA has already, uh, taken a upward slant, which makes it even more bullish. Although we have hardly moved from last 5-7 sessions, but then still the slant basically helps. And looking at the overall trend participation in breadth, Nifty 50 is bullish. I mean, I think a lot of momentum is shifting towards the large caps. And I think on my Friday sessions, not Friday only, I think prior to that also, I have been saying, I think a lot of momentum is shifting towards defensive sectors and larger larger caps. I mean, healthcare, reality, financials, banking, those are the sectors which are doing well for India. And I think very similar is the story for even US. But I think for at this point of time, India looks much better in those sectors. Nifty 500 again bullish. Participation is strong. Breadth is still mixed, but I think it is matter of time they should regain it. This is US markets, S&P 500. The advances were 166 to declines of 334. Uh, I think slight improvement to prior session. I think the in the prior session the advances were around 140, so slight improvement. But honestly, like this you can call, like, I mean, during the fall it is just a pullback, nothing else. New highs, I think this just collapsed. We were running somewhere at around 40, 50, and I think on Friday session it was still at 20, and today it has gone down to 7. So I think, I mean, see, if it was gradual it would have come down to 15, 16, 17, but then from 21 to 7 I see just it as a collapse. uh, the breadth for sure, I mean, at this point of time it looks stronger uh, because the thing is, while the stocks start falling, they will not just, gap down by 20%, 30%. They will take their own time to, go down as well. So at this point of time, above 20 MA 263 stocks, above 50 MA 306 stocks, above 200 EMA 320 stocks. This is how Nasdaq looks. I mean, it became a negative chart, right? And if you remember, like, if you have been following me from 3rd of June, I have been telling Nasdaq I'm not even making any new positions in Nasdaq. um I mean, I think you leave about, I think in the entire month of June I did not made any new position, and I still have holdings because they are just doing fine, so I don't want to liquidate them just for the sake of it. But I have got an exit in Micron, so that was it. And US markets have not been making any new positions. I'm just holding on to what I have. This is S&P 500, better looking chart, but then I think a lot of strength momentum is easing out here too. So better watch out. And this is Russell 1000, Russell 2000, again not looking very good. At the same time, this the participation in breadth has also not been supportive. The overall picture of the for the US market at this point of time: Nasdaq 100 bullish, participation mixed, and breadth mixed. S&P 500 bullish, participation weak, and breadth mixed. Russell 2000 bullish, weak participation and mixed breadth. So what is the takeaway? See, my takeaway still would be, at this point of time, I'll be trading Indian markets with an exposure of around 50-60%. Why I cannot go all in? Because, like I am saying, a lot depends on the external factors. The overall Indian markets look good, but then what is happening is every day some or the other news comes in, and somehow, the markets are not getting the strength, the steam, or the momentum which they would have wanted. The second point is, I think a lot of DI inflow keeps happening in the markets, but the problem is, so just to give you a figure, maybe for instance, if DII is putting in 100 crores every day, FIIs keep pulling off 120 every day. Net we are not getting any positives. So although I think DII has been a great advantage for India, or else the markets would have looked terrible at this point of time, because just because of the SIPs, they keep coming in, they keep coming in, they keep growing. The markets in India have not gone bad, which is good for India in long term, because SIPs, like, I think with time people will start trusting more and more and more inflow keeps coming in. Our dependence on FIIs would reduce, but at this point of time, somehow they both just equalize each other, they just neutralize, and whatever DIs put in, FIs just keep releasing it. So that is one of the challenges for the Indian markets. Like I said, I mean, look towards defensive sectors like healthcare, reality, banking. IT is also trying to gain something, but I think I'll still wait and watch. But look towards these sectors in India. Try to have an exposure of around 50-60%. US markets, I think I would reduce my exposure even further. I mean, honestly, I'm not even putting in any new positions because to me that market looks absolutely volatile now. So maybe you can also ignore. But then if you are very like you are someone who wants to take those bets in the US markets, I think like till last week I used to say for US markets S&P 500 the exposure should be around 50-60%. I think at this point of time it should go down further to maybe 25-30%. You should not be having an exposure more than that. For sure you will get opportunities, but that will require a lot of scouting. It won't happen out of blue. So if you can scout well, the exposure cannot be more than 25-30% in the US markets, majorly into S&P 500. The global macro, the yields are rising, and that is the reason the equities are falling. Dollar is also rising at 100.96. VIX somehow, has now started rising from last 2-3 trading sessions, and that is very much visible in what markets are doing. BTC at 65,391. Now, see, the thing is, these are some of the major issues which the market. I'll just explain in the next slide. And the goal at 4028 has hardly moved. Dollar chart, dollar is rising till the time dollars keeps rising. You can expect the Indian markets will struggle, and that is the reason I'm saying not to have an exposure of more than 50-60%. If you have ongoing positions, please don't liquidate, follow your stop losses. But then if you're trying to make new position, it should be with an exposure of 50-60%. Bitcoin at 65,000. So I'll tell you, the US equities and Bitcoin are basically very, very highly correlated. Now, just imagine the kind of variance this is. Bitcoin is trying to rise while equities are literally struggling. Dollar is also rising and yields are also rising. And VIX is indicating at 18 that things are not very bad. But trust me, these are four things going in four different directions. And this is not a very confident giving news or sentiment for the markets. So that is the reason I am saying at this point of time, at least US perspective, you should definitely, you cannot go with more than 25-30% exposure in the US markets, because these are very different variables pointing in different directions, and then you expecting something very concrete in terms of outcome, it won't happen. I mean, it will just lead to some like literally not a very good signs in times to come. So it's better wait and watch. If you can preserve your capital anyways, the market remains there, you'll get ample of opportunities to trade, to invest. So at this point of time I would say 25-30% is the max exposure you can have. US market 50-60% in the Indian markets. Gold is like just forming a base. I mean, for me, gold is no go at this point of time. So overall takeaway for today's session would be the Indian exposure in defensive sectors should be at around 50-60%, which is IT, healthcare, uh, private banks, PSUs, and at the same time for US markets, I think it is large cap tech companies. I'm not talking about those mega seven. I'm just talking about large tech companies, financials, healthcare industries, even in the US markets. But the exposure cannot be of more than 25-30%. For short term, for trading, maybe you can look for opportunities in Bitcoin. It more often than not keeps giving you short term opportunities. That's everything. I mean, just be very mindful of the exposure you are putting in. No point going blind and just putting everything all in. The markets are volatile, although the VIX is not indicating at this point of time. That's everything from my side. I hope you all found this useful. Thank you so much and see you next time. Have a good one.